Hi, gang. This is our short teaching for our Substack. The Substack covers our weekly market update, and I wanted to put in an extra insight. I wanted to make these short because you've already invested a bunch of time in reading my stuff. So I'm not here to keep you here all night. Not yet, but maybe eventually. Anyway, this week's revelation is concerning how to recognize rejection zones when going short. And the reason for this is if you can recognize this, you will save yourself so much time and aggravation and paper cup losses going short too soon or too late. So let me show you what we're talking about. This is a perfect classic rejection zone on a gold chart. And this is recent action. This is the recent pullback. So what I want to show you is you have a high, and it's important that you have a calculation for the high to trust everything that comes after that. In this case, on the Gann calendar, this upper tail is manifesting on the 135 DG day of the year on the Gann calendar, and the price is 35.34. So you've got that 34.35 vibration working. Okay, so you've got a upper wick, which they try to fill. They fill it approximately halfway. But look at the prices. This is what I want you to realize. The high is 34, 534. The next high is 514. It's not to the penny, but it's close. But now look at the next successive highs. The next, we have 14, you have 7, 7.1, and 6.5. So you're looking at basically a half a point, and it gets up there and it fails. So my point is, if it gets up there and it fails with a good red bar and a reading, that's a very high probability of success. So what is the reading here? Well, this turns out to be a 58% retracement to the high, and as you could see, it's also 58 bars. So if you're new to this thing, I suggest you go to the website beyondthegoldenspiral.com and check out we have lots of free content there. You can get an idea of what's going on, and there's also a lot of material that you could buy. But the bottom line is this is a zone, and they can't get above it, and it eventually declines. So here's the notes for this teaching, so you don't have to take the notes on your own. Rejection zones are not always going to appear. So don't think that every time the market's going to turn over, you're going to get a good rejection zone, because you're not. But when they do, your chances of success are much higher. What we do is we combine these zones with price and time calculations. And as you've already seen on the gold chart, it's not exactly to the point or 1 point difference, but on the E-mini, E-micro, the differences from the secondary high to the absolute high can be as small as 1 point. For stocks, it will be several cents to a half a buck off, or even a few points, not many. And it's best to combine it with a bull trap if possible. Here's our standard disclaimer. Trading and trading futures or stocks is not for everyone. Do your due diligence, and the author is not responsible for your wins or losses. This is for educational purposes only. Okay, so here's a really good situation that you're going to see a lot of the time. You have a high with a big volume and it can't go any higher. And so what the smart money is looking at is that what they want to do is they see a potential bull trap here, and what they're trying to do is close the trap door. And if you notice on intraday charts, smaller time frames, what the smart money is doing is that they're playing these little cat and mouse games all day long because they want to catch people in a bull trap and they also want to catch bears in a short squeeze. Why is that? Because the points are plentiful and they accumulate really well. So let's see what happens here. So this is on the prior chart. This is your big bar. Okay? As it turns out, the high is 219. Follow along the top because you may not be able to see the numbers. The high is 219. It drops to 187. It's a 32-point drop. And it's 17 minutes after the hour to 49 minutes after the hour on this 1 minute chart. It's 32 minutes. So what we have is one of our replication flips. 32 points, 32 minutes. So you don't actually have to wait to beat that green line to take advantage of it. The more aggressive of you who understand what you're doing and understand these price and time relationships, you can get into it just as soon as it starts dropping. If you have a good reading like this. I mean, look at it. 32 points down, 32 minutes across. Look what happened. Not only did the bull trap close the door, but our calculations here worked out really well. And you could have gotten into it as late as here above the line because what we have here is 218 to 204 is 14 minutes, but the intervening high is 15, and from 49 minutes after the hour to 5 minutes after the hour is 16 minutes. So it's all lining up after this is lining up. And the better it lines up, the better it's going to fall. But the key point is that bull trap. So what we're trying to find are bull traps and rejection zones put together. You'll have to exercise a lot of patience and discipline to catch the better moves. But that's what the good traders do. Okay. Now what we have here is a historic setup, and I was talking about this setup in the weekly Substack. And what we have here is the lead in to 9/11. This is the drop from 2001. Okay? And what we have here is the drop formed at August 27th, and there's a reason for that, which we've discussed in the Substack, because there are other important turns in the market that happen at this anniversary date as well. But heck, look at this. You have the 117 DG day, you have the 155 DG day. It's a 38 DG difference, but in terms of the points, you're looking at a 238-point difference. So you got 238 points in terms of price. You got 38 degrees in terms of time. And that fired off right here. And just a few days later, we ended up with that big down wave on 9/11. But this was the setup if we were paying attention. Does this work for stocks as well? Absolutely. We've got ourselves a rejection zone here. And the key point, there's a lot of things going on here. But the most important thing here is that this secondary high is 64 days up, and it's a 64% retracement to the high. Now there's other readings in here as well. Like this day is the 52 DG day of the year. This high is the 109 DG day of the year. The difference is 57 degrees, and the low is 3.57 points down. Now from here to here is 39 days, and from the original high to the breakdown point, it's 140 degrees. So there's a lot of things going on this chart, and you have the classic rejection zone. Okay, so this is the same action scaled down. And what we have here, from the high to here, 2404 to 2383, is what? 21 cents? That's a stock. It's not a futures market. So that's really close. So what we basically have here is a drop of $1.79, and it's roughly 80 30-minute bars to here. So that gets us to here. This is shortable over here. But now, as you see, before the drop, we have another higher low that doesn't take out this. It's 23.83 to 23.62. Was that 21 cents? Basically, I'm showing you this on a 30-minute chart, but this is 71 15-minute bars from here to here, and it's 70 cents up from 22.92 to 23.62. And you could see on our final chart, this is the 15-minute, where you could see that we're 70 cents up and 71 15-minute bars across, and it starts to drop. So I'm going to tell you about a YouTube special that is going to be here until I decide to take this video down. Now, the training program, which on the website is $863, the YouTube special for this video is $697. And we also have a special going on our great new manual, the 1 hour 60-minute cycle manual, which is the big game changer. It's $277 on the website. It's $217 here. So what I'm asking you to do is bypass the website, mention this video, and send funds to lucaswaveman@gmail.com through PayPal, or request an invoice. And that's it for till next time.